Well, hi folks, it's Sunday and a quick update on natural gas. I apologize if the audio isn't brilliant, but I'm away from home at the moment and on a sort of a working holiday, and the flat that I'm in is tiled, so it's a bit echoey. But let's just do this nevertheless. So this is where we are at the moment. Natural gas has fallen down through first support at $2.35 or 36 or so, and has fallen down to the bottom of this pink area. I've got my positions written in here for ease of reference. You'll know if you've been following my videos that I'm in a hedged position, long at $2.10, and I was short at $3, and I added some more on at $2.55, bringing my ratio to 65% long, 35% short. I've now adjusted that hedge on the close beneath the support on Friday, and now I'm hedged 50-50 at these average prices, $2.10 long and $2.95 short. You'll notice that both of these hedged positions are in profit at the moment, and now that I'm hedged 50-50, it doesn't matter if the price goes up or down, my net profit will remain the same. And I now have the time to be a little bit more relaxed about it and consider what I will do next when the market takes its next step. Having said all of that, we need to look at what the next likely move for the market is. At the moment, naturally, it's bearish because we've broken down through this purple line, which was first support at around $2.35. I've actually got it in at $2.38, which is the bottom of these two recent candles. But you can see if we look at this pink zone going back to February this year, the low of these candles was actually at $2.34. Now, again, these numbers are not precise and they're not exact, and they give us a rough estimate within a few pennies of what these levels are and where the market is likely to react. We need to look further back in time to see if there's any further support between where we are at the moment at $2.35 and this low that we formed just below $2 in February this year. So let's just scoot back a wee bit on the charts and see if there's anything else we can find between $2.35 and around about $2. You might remember that I had a support line drawn in at $2.20, and the reason I had that line in is if we go all the way back to 2012 and a couple of other occasions after that, you can see that $2.20 did form a sort of intermediate support. Twice there in 2012. In 2016 it formed a resistance level on that occasion. In 2019 it formed a support level on several occasions between July 2019 and December 2019. It also formed a resistance line in May 2020 on this occasion over here, and it also formed a support level in October 2020. So I would consider $2.20 as a sort of a minor support level, and it's potentially not going to form a significant barrier to further downward movement, but it may do. It's also a bit of a consolidation zone going back to earlier this year where we fell through and then moved back up through it. There was a bit of bouncing around. Once again, please forgive the echoing. It's a little bit off-putting for me too. The other thing I want to do is draw a Fibonacci retracement study on here from the lows just below $2 up to the high at $3. And what you'll see is that $2.20 is also the 78.6% retracement of the move up from this level here at $1.96, just below $2, up to just above $3 in recent moves. So this $2.20 level, apart from being a previous support and resistance line going back some time into prior years, is also the 78.6% Fibonacci retracement of this recent move up from just below $2 to just above $3. So it may form an interim or potentially even a more significant support level. If we fail to find support at $2.20, it's very likely that the price will move back down towards the $2 level or just below it at $1.96. And the next potential support level below $2 is $1.80. And you can see where the $1.80 level comes into play, because if we scoot back in time again and have a look at the $1.80 level, you'll see it acted as a consolidation level in 2020, also a significant support level in 2020, and it acted as a support level in 2016. In fact, we got just below that down to $1.67, and we could even go back all the way to around about 2001 and 2002, where the price found support and formed a double bottom just above $1.80, actually at about $1.85. It's been a significant level for some period of time. And if one really wanted to go a long way back in time, into the 1990s, you can see that $1.80 was significant over there as well. Again, forming a double bottom against that level, and a bit of consolidation in that area, support and consolidation at $1.80. So that seems to be the next level. It's also one of the 80 and 20 numbers, which are always significant price magnets in any form of trading, whether it's in commodities, in stocks and currencies, metals. The 80 and the 20 levels are always numbers that you need to pay attention to. For some reason, due to human psychology, they tend to act as price magnets, 80s and 20 levels. So let's go back to where we are today just to summarize. We've broken through $2.37.38. We've come down to $2.34.35, but we've come down to the bottom of this pink zone where we did have support before. We may well hold here. I don't know. This could be a sort of a false break through these recent lows. We may bounce back up from here. I don't know what's going to happen over the weekend. That's why I adjusted my hedge at the close of play on Friday rather than waiting to see what transpires over the weekend. It is possible that we'll gap up higher over the weekend, or we may gap down lower, or we may not gap at all. We might just open at the same price. Who knows? It's very difficult to tell. Often, as we've seen, the price of natural gas can gap over the weekend. If we fail to hold here at $2.33, $34, $35, we'll probably move down to $2.20 for the reasons I explained before. It's a previous support, resistance, and consolidation level, and it's also the 78.6% retracement level of the recent move up from just below $2 to just above $3. If we fail to hold at $2.20, we'll probably be heading down back towards $2 and potentially just below that, $1.95, 96, 97. And if we fail to hold there, the next stop is probably $1.80, thereabouts. Maybe slightly below, maybe slightly above, for the reasons which I mentioned earlier in the video. My strategy, as I said at the beginning of this video, is to retain my hedge. As it is now, it's equally balanced. I adjusted it from 65% in the favor of the long position and 35% in the short position to the current situation where I'm now equally balanced, 50% long, 50% short. My average price long is $2.10, and my average price short, considering the adjustment that I made at $2.55 and the rebalancing I did before the close on Friday, is $2.95. Both of these positions are currently in profit. My net profit is neither going to go up nor down, no matter which way the market moves from today onwards. Because the market appears to be heading down, I've given you the levels below us where I think the market may head next, and at those levels I'll begin to look at readjusting my hedge. The only hedge adjustments that I will be making going forward are in favor of the long position. So I still have a target for natural gas at around about $3.50, 60 or 70. How long it's going to take to get there, I have no idea, but I will be adding long positions if the market starts to move down. I'm not sure when I'll be adding long positions or at what price, but I'll judge that based on the speed and the momentum of the moves lower, if we do move lower, and the price levels that we reach, and relook at that time, and I'll be posting more videos up on that in the future. If, however, we begin to move up from the current level, if we find support at current level where we are at the moment, around $2.35, and we begin to move higher, I may also consider adding on long positions to capitalize on the move up if we break and hold above the two support levels that lie above us now, and that's at $2.67 or 65 and at $3. If we start to move above those levels, break above them, hold above them, back test them from the top, and successfully hold those back tests, I'll be looking to add long positions, and that will be at $2.65-ish, $2.66, and then $3 or just above $3. So that's my overall strategy. Right now, I don't need to do anything. I'm equally balanced. My risk is set and fixed. In fact, there's no risk because I'm in profit on both sides of the hedge, and I can just wait to see what happens in the market. For those of you who are not in a position right now and who are looking to trade natural gas, I think the only sensible direction that you might want to be considering is short. However, having said that, I'm not too sure how far this market will move lower. We've got this level below us at $2.20, which is the support level I described to you earlier because of previous support and the 78.6% fib. And then we've got $2 below that, and then $1 below that. How far towards those levels and how quickly that may happen, I don't know. If we move up from here and you're not in a position just yet, I'll be looking for a break and a hold above these two support levels at $2.66, 67, a back test, and a successful hold above those areas for a move higher, both at this level and at this level, looking for long positions for a move up into $3.50, 60 or 70. One thing I want to say right at the end here is I've seen some comments and I've had some emails from people saying, I said you should do this or you should do that, and they've taken positions based on what I've said in these videos. I'm not suggesting that anyone does anything. I'm telling you what I'm doing. Quite frankly, I really don't know which way natural gas is going to go. I'm reacting off the levels as they occur, and I'm looking at the price action, and I'm deciding how this market is moving. I have no idea whether we're going to go down to $2, $1.80, $1, or if we're going to rush up from here to $3, $3.50, and $5. I really have no idea. A lot of it is dependent on supply and demand and weather, geopolitics, all sorts of things. So I must caution on anyone watching these videos, this is not trading advice. I'm telling you what I'm doing. I really don't know what the market's going to do. No one can tell you what the market's going to do in any market with any certainty. We can react to probabilities based off the charts. We can react to what's in the news. We can react to all sorts of things, but these are just reactions where we're trying to glean the best possible information that we can to make the best decisions that we can and put the odds in our favor. And that's the very best any trader can do in any market. I hope you found that useful. And if you did, please like the video and subscribe to the channel.